starting this recording a little bit late. It was like 2 minutes and just looking at a trading view document, but basically new member, just doing some back testing. And as you can see, even in the very beginning, just going through and testing any of the strategies, whether you're starting from section 1 or watching all of them, or coming from a dynamic background of seeing almost all my YouTube videos and other stuff, it's crucial that you watch either section 1, then go and back test, watch section 2, back test section 3, and then back test like crazy, because section 3 gets real deep. Part of back testing, something I actually did want to bring up is, first of all, you need to restart Zoom, maybe because I'm not seeing your screen. Are you guys not seeing my screen right now? All good, I see it. Okay. If you can't see it, it'll be uploaded. Fantastic. Still got the recording. Yeah, so it'll be available to you there. But something concerning backtesting, very quickly, let's go find the Discord. There it is. Oh yeah, we've been talking about funding talent all day today. Also, for new members, do not go with them. I've always said they were kind of dog shit, and I guess it's coming out that they pretty much are. They used to have a very, very stingy way of paying people out back in the day, and then they try to revamp their whole thing to look more like FTMO, I feel like. And even then, when you're trading an account with them, it appears that you're not trading a real account. So this is just hearsay, right? I'm not gonna go read the document for yourself. It's posted up in here. This is some of the the prosecution's viewpoints about what they were basically doing wrong, which is none of the accounts contained real dollars, and no funds are ever deposited or withdrawn from the accounts. So even if they were operating on demo, this could be okay. But then when you get here, members who play within the rules set by the company and generate fictitious profits are paid a talent bonus, which is paid from revenue generated through subscription fees. So they're not paying real fees, but the talent bonus might also be part of a demo account, which is still not too bad. But point D and point E is where it really gets. The real accounts do not contain real dollars. There are also simulated accounts, and there's no real trading conducted in these accounts. So even though it's simulated, there's still no real trading going on. And members using any type of account are never in the real market. So on FTMO, you guys do get we get a demo account that is connected to their live accounts, and I guess this allows them to act as not like a hedge fund, because you're not allowed to literally trade someone else's money like that, but they're allowed to simulate it, which is why at FTMO you'll have like a demo account that's connected to a live one that's actually traded. In this case, it just appears like their whole business model is basically built on the hope that so many people take the challenge and fail, that they can use the profits of that to pay off the members that pass and do well. So I mean, for the most part, it's legit until not enough people sign up, because at that point they won't be making profits from the people, right? So if they actually have good funded members, if they, for instance, had 1,000 members and 10 of them were really, really good, those 10 people could make the entire prop firm go broke, based on what I understand. So just be careful. Look into prop firms. Best prop firms probably on my end, just from what I've seen, would be the 5%ers, which is it's much different. It's very different for our way of trading, because we like high lots and they have like leverage sizes, but they're legit. And FTMO, which I think is the best. There's a few others. Definitely go check those out in the brokers and prop firm section, because we like go over it. A lot of people go back and forth on stuff there, and even I'll chime in sometimes. But be careful, because when you choose a prop firm, it's choosing a pretty full-time kind of job, and it'll help you grow a real account, and you want to make sure that it's legit, right? And if a lot of you understand, you've asked me about this as well, what does it mean to go the prop firm route in terms of trading? The prop firm route, and the reason you want to do it, okay, and this is not going to be the same for everyone, but the reason you go with a prop firm is because, one, they provide you capital that you can trade with, right? And it's not just capital, it's a shit ton of capital. You're going to be trading with a lot more money than you can start with when you're first starting, and that allows you to build profits that are not compounding, but still build profits that would be more than anything you'd ever be able to do with a $600 or $1,000 account, which is what a prop firm basically costs, right? So as a result, you're able to build a bigger balance. As you saw, like we had, I don't know if it was in testimonials or motivation, we had one of our members after his first funded month make on a $100,000 account make about 32%, so $32,000, right? That is not possible with a $1,000 account, or even, for instance, a $5,000 account. The only time it is possible is if one, you're over leveraging or over risking entirely, right? Or two, you're trading not within any set guidelines, or three, you're more so on the gambling side of things instead of the consistent trading side of things, which means that you shouldn't be trading in the first place, right? And if a lot of you know, especially if you're new, we at mentfx, even though we do send out some signals sometimes, whatever it might be, we are not on a we're not on an earn and learn basis, okay? What that means basically is that the only time you should be taking any trades in this market is when you have basically back-tested, forward-tested, understood your entire strategy, refined your strategy, understood your risk management, managed it on a smaller account, demoed over 100 trades, maybe even had a lower $100 account, which you traded with, and you have 100 trades of proof of what you can do, something of that nature that allows you to know exactly how it is that you want to be operating in this market. Now, that actual system can evolve and change over time, no shit. You know, like even from the beginning, for those of you that have been here from the start of the entire YouTube channel, those that have been here know, not even the YouTube channel, but also the mentorship, know that my trading was actually a lot different than it is right now, right? There was a little bit more, not flexibility, but I was more so entering on some things that I was sometimes unsure about, right? It was still Wyckoff. It was still grounded in the exact same principles. However, one, teaching it, two, having to refine it for you guys, and three, teaching you guys about it, but also trading on my own with it allowed me to find and refine my own system, my own edge. And now, as you know, I have a very, very set forward strat. When I get in, I have areas where I partial on the way, get out, get in, get out, get in, potentially hedge, whatever it may be. And that's how we do it. Which prop fund is this? The good one I'm talking about is FTMO, the one that's getting like sued or something, whatever this is. I'm not sure. Go read this thing to find out what's actually going on. I didn't really give it a lot of time. Is Funding Talent, which I do not think is a good firm. And there's some reviews online too, which if you watch, you'll notice that it was a very, very weird and stingy community at the very start. So now that we're pretty much gotten that out of the way, I think they are. I'm not 100% sure. Now that we got that out of the way, though, yes. If you want, you can go and check out the 2 videos I got on it on YouTube. I basically go over the entire thing. Right, where is it? Right here. Oh wait, that's the verification. So you'll watch that for the verification, see all the stuff that went down in that, and you will see the challenge right here. So if you want to go watch those, you know, 1, 2, you can watch all the things that we took for the challenge. How do you do top down? So we're actually going to do some weekly outlooks, and we're going to talk about some of the stuff past week. So, you know, because we've already covered a lot of things in webinars and the sections, so it's going to allow us to actually work on weekly outlooks as a team now, and potentially even look at some of your own, right? But in this one, the actual challenge, I think I share some stuff here, right? I don't remember 100%, but let's see. Maybe at the start somewhere. Does it show it? Okay, either way, I don't know if you guys were here for this week. Some of you were. I know you were. We were working within this very tight range, thinking that we had Wyckoff occurring here. That was going to go way lower. That became an even bigger Wyckoff. So actually, there was a Wyckoff that became another Wyckoff, that became another Wyckoff, that became an even bigger Wyckoff, that became an even bigger Wyckoff. And all these cells, basically, all the cells inside of here with proper risk management passed the FTMO challenge for me. In literally 2 days, there was like 60 trades, but that was also taking into account partials. But the point of this was showing you guys how you can work back and forth within a range. And on top of that, if a lot of you have seen, hopefully you have, the live trading section where we did the back testing, we did pretty much the same thing here, right? We were on a monthly chart. So first of all, I wanted to show you guys that, you know, it doesn't matter what time frame you're on. And what actually matters is what your strategy is. If you can apply your strategy to one time frame, it should be applicable fractally to any. Because especially since we're in smart money, the strategy should be able to be broken down into its smallest form, which is basically like the tick movements of a chart. And like you don't have to trade the tick movements, but the idea of a strategy in smart money is that you understand that the price is delivered to you in an algorithmic way, in a fractal way, in a way that is always benefiting the composite man. And to do that means that it will undergo the same thing in all areas, no matter how big or small, right? So yeah, check out both of those. And also, if you do remember, if you have seen this backtesting video specifically, you know that, you know, we were basically on a monthly chart and we were talking about this structural break right here, right? So as you all know, very easy to tell, very easy to understand, when we have a high, a higher low, and then we break through that high, we understand we've created an impulse leg, and more likely than not, we're going to look for the buys up into those areas. But because we're not just structure-based traders, where we're just looking at structure going, all right, you know, this is created, we're here, let's just aim for new highs. We understand that price could also very easily begin to put in a bearish structure from here, right? We are constantly working between ranges, and we understand that price can always reverse and continue in different directions. And the way we do that is what we kind of now at mentfx understand as zone trading, which is understanding that you have multiple areas of supply and demand throughout the market that are printed to you. Those areas of supply and demand can be put together with a bias that is in the form of structure or mentfx blocks or even Wyckoff, and then can be confirmed further with the same thing, mentfx blocks, Wyckoff, or structure on a lower time frame. So understanding that from here you can be a buyer, in here you can be a seller, in here you can be a seller to new buy areas is what we do and how we do it. And if you have not seen this video yet, please make sure you check them out. How do you identify POIs? We'll talk about that in a second, but for the most part, that's section 2. But I did want to bring up something on backtesting about this. So definitely check out this video to understand, you know, that we are not just structure-based traders. There are people, smart money-wise, that are structure-based traders, and maybe even some of you in here only use structure. But no dumb questions. Nah, don't worry about it. It's okay. Here we're all about helping each other. It's all good, man. But you need to understand that a lot of smart money are structure-based traders, and that's fine. We at mentfx are not only structure-based. Just because we're making higher highs and higher lows does not mean we're only looking for buys. Does not mean we're going to be bullish and just, you know, blindly anticipating bullishness to take out new highs. Because we also have to be courteous, or we have to be aware of the fact that price can easily continue lower to other areas or zones that have inefficiencies, that have other supply and demand zones that are unmitigated. And as a result of that, we need to understand that management is going to be a key to our system, as well as the way orders are being delivered in the market, or understanding the way orders are being delivered in the market. And that's something that I did actually want to touch on. So we'll go up here because we're going to work through some of the questions in a sec. But something that I wanted to touch on, especially in this specific webinar, is the idea of time frames. So as you all know, we touch on time frames quite a bit. But one of the things that is always still brought up as a question. So definitely, if anyone ever poses this question again, send them to the webinars, because it would mean that they did not watch the webinars or take notes, because you guys should be taking notes every step of the way. Even when you're journaling trades, even when you're looking at a trade to take, even when you feel like you understand that you know what you're doing, you should be journaling things, because it will help you notice things that you might have not noticed at the time, right? And things will come back and they'll be like insane spiritual realizations for you. You'll be like, holy shit, it's happening again, right? And then things will hit you, and you'll have your new little refined ways of working with a range or working with certain structure. But one of the things I really wanted to bring up is the question that is posed a lot of the time is, what's my best time frame for entry? Should I be using my, a 4-hour for a POI and a 15-minute for entry? Or should I be using something lower? Should I be using a 5-minute? What should I be doing? And my answer almost always to that is use them all. Use them all. Use them all. Now, there's going to be a public video that I'm going to release on YouTube. So this is going to be one part of that answer. I'm going to release a public video on YouTube called the Rule of 30. Okay, and the Rule of 30 is that basically, based on whatever time frame you're looking at, on the POI that you have on that time frame. So for instance, let's go to EU here. Let's just go back to the monthly chart, work all the way back into the areas here, right? So let's say we have a POI. So since this came to test, let's look at this one, because this one tested a really easy to find POI, right? The last down candle before the up move that had unmitigated orders in it, right? Because it never had been tested, and it came to be tested here. It came in deep, that's fine. The Rule of 30 ultimately is that to go and find confirmation within this supply, in this case, inside of this demand zone, you want to go 30 times lower than the time frame you're on. So what does that mean? What's inside a month? Okay, well, a month is also 30 days. So under the Rule of 30, your confirmation time frame for this should be the daily chart. Okay, that's a rough way to view it, right? Now, there is no right or wrong time frame for you to be operating on. There's the Rule of 30. That means that if you're on a 30-minute chart, your confirmation should be on what? A 1-minute chart. Okay? Do you understand kind of what we're getting at there? If you're chart is a 1 day chart, what should your confirmation time frame be? Somewhere under 1 hour, right? Because there's about 24 hours in a day. Okay, that's the rule of 30. Because what that allows for is one, if you're looking at a 1 minute chart here, okay, let's say this is that zone on a 1 minute chart. What's going to happen is you're going to see, as price comes into it, you're going to see accumulations here, distribution, you're going to see accumulation here, you're going to see accumulation here, accumulation here, you're going to see larger accumulations in here, even on a 5 minute, you're going to see accumulations here, and you know, this is where you're going to get really, really lost in the lower time frames. This is why I always say start with the higher time frames, because it's easier to start seeing things like this unfold. However, even at this low right here, you will have a 1 minute accumulation that occurs. Now, this is the way that I trade. I catch all of these buys whenever I get the chance and partial along the way and manage those trades, because I understand that price can easily, given the fact that we're in a much, much larger time frame supplier demand zone, come deeper into it and mitigate more orders and give you more Wyckoff schematics of any case, of any sort, right? Now, when you actually take the month and realize that it's 30 days, if the daily is to give you an accumulation in here, that daily accumulation is pretty much either going to hold or going to get liquidated. Why? Because the space that you're using for that demand zone is really only capable of having one accumulation schematic, given that you go or use the rule of 30. Okay, so hopefully this might help some of you that have been really confused about timeframes. But the idea is, no matter what time frame you're on, if you have a POI, use the rule of 30 for now to go and look for confirmations within that POI. Sometimes you'll have to go lower because price will not always move the way we want it to, and price will not always give you that type of setup, but the rule of 30 is really good. That's why when you saw this backtesting session, I did, if you recall, use an 8-hour chart at one point to find like an accumulation in here and in here, but for the most part, I use daily. Why is that? Because if we are to see a distribution on the daily inside an area of interest, right, whether you're looking at this mentfx block or this inefficiency, whatever it might be, then you're going to be very, very, you're going to be confident about the fact that, you know, either this holds or it's going off to the fucking moon, like it's leaving you. So that's how it is, right? So hopefully, that made some sense to you guys. So what I mean by that is, okay, like I don't remember if there is a buy in here, but if this was an area that you were watching, for instance, sorry about that, I know that must have killed some people's ears, but if that was an area you were watching and then we went back to it, notice how the daily moved in it, right? When this daily came into it, yeah, as you can see, there is no reason that you'd confuse anything prior to this price action before the breaks that began to take out these mentfx blocks right here and put in new mentfx blocks, like right here, right? I'm only using mentfx blocks in this case because it's easier to describe overall moves, and if we use the lower moves always, we're not going to see them. And if we use, oh, actually in this case the demand zone was perfect, but let's just use the mentfx block because it's easier to use for the sake of explanation. But as you can see here, using the rule of 30, which is inside a monthly POI, we're going to use a daily chart because there's 30 days in that month, 30 candles basically. You can see how either this accumulated, which it did, or it just came crashing down. Now within this, you all understand that there's going to be an accumulation in here, in here, in here even, right, for this move right here, in here, even in here for this mini move up on a lower time frame. What do I mean by that, right? I mean, a lot of you already understand, but for the newbies, let's go back here to this daily time frame. The second we get to a 4-hour, right, maybe even lower, why not? Screw it. Ah, shit, we can't go that low. That kind of sucks. All right, let's go back up for a sec. Let's go back here. Let's go on to a 1 hour, 3-hour maybe. All right, sure, let's fuck with the 3-hour for a sec. So as you can see now, right, you have an accumulation that exists. Well, let's look at the actual POI that exists in here, okay? With the break actually that happened here. So if you did look to engage on this, you actually could have still probably gotten some partials because there's accumulations here. There's an accumulation right here. And this could have been either break even or partial, right? Easily. There's an accumulation here that was never validated. And if you did think that this got validated, maybe you have these lows, right? And this is a spring or an ST and B in this case, then this would have validated the schematic. And at that point, right, where's your POI? Down here. And on a 30-minute chart, or this is a 3-hour chart, right? So what time frame should you check for the validation of that? Well, if this is a 3-hour chart, how many minutes is that, right? So that's 180 minutes, right, divided by 30. So if you were looking at a 6-minute chart inside of here, you're going to see this. You can see the schematic already, but I can't go lower here. But you're going to see the selling climax, the AR, the ST, the liquidation of that STB, the spring, the move higher. Maybe it breaks structure, maybe it doesn't. So in this case, maybe there's no entry, right? That's also can be the case. An entry here, you take it higher, take it out at either the supply zone that exists here that's probably unmitigated on a lower time frame, right, for partials, or if you're aiming for new high prices into these imbalances, for instance, then you're going to get stop break even on this, right? But the idea is, as you can see, even the rule of 30 in this case would work. But that's how you'd want to be using your confirmations. So that's the rule of 30. We're gonna have a public video on the rule of 30, just because, you know, it's not something crazy, but it will help a lot of you that are always unsure about what time frame to use. Now, on top of that, a lot of people ask, you know, what time frame is actually the best for these setups? The truth is none. One, use the rule of 30. That's the best thing you can do. But secondly, the market, like we say, is fractal in every way. The way that you saw me do this backtest on the monthly and daily is the same way that I trade the 30-second and the 15-second. The setups are the same. The only difference is they happen a lot faster, right? Which means you either have to be on top of your shit and you got to be partialing quicker and you got to be in and managing that really well, or you have to work with a little bit of a higher time frame because spread might factor in or commissions might factor in a lot to those entries. So for instance, on this daily, right, if we did take this entry, I mean, you know that if this runs, you know, let's say you got in on this buy. I know we're not actually saying you did, but let's say you just got in on this buy. You look at this demand zone, you like the way this traded higher, you like this mentfx block, you had maybe an entry here, and because you're unsure, an entry down here in case it wanted to come much lower. So maybe you had like 0.5% on this running at this low and 0.5% on this running at this low. So you understand that if this got taken, this one would be entered. Doesn't get entered, we'll get rid of that. So you have 0.5% risk on this. In this case, let's assume 1% risk just to make it easy for math. There's 1% risk on this. Now, just because it's a daily chart doesn't mean you can go like this. Just like if this was a 30-second chart, you can't just do this. You have to recognize that order flow wise, when you get involved in this buy, which is right here, price at this specific point can do a number of things. One, it can go and run all these highs all the way up into inefficiencies up here. That's fine. Two, it could validate a larger schematic or this specific schematic and run the highs here. Okay. Three, it could come and test the unmitigated portion. So actually there's no unmitigated portion in this time frame. But if this was unmitigated, right, let's just assume that maybe there's an unmitigated thing in this wick, even though it's not the wick that was the last up move, right? So theoretically, I would have targeted above this. But because this could be a distribution as well, you know, this is what you would potentially target as either break even or target one for partials or BE, right? And this is the same thing that you would do on a seconds chart. Now, the difference is that when you're doing this on a daily and you're entering this daily, right, the first RR is about 1 to 3.5. So, you know, because you're taking off half, that's 1.75% secured. That is going to be almost a guaranteed 1.75%. Why? Because spread and commissions really don't fucking matter on a daily chart. Because there's so many orders that you trade very minimally, and your commissions and spread are going to be a tiny factor. Now, if this was a 30-second chart, well, this entry would probably get you in, you know, instead of getting you in right here, would get you in maybe somewhere here because of spread, right? Because it's a lower time frame. So you're entering here instead of here, which means that now you're at this point. And let's even factor a little bit for commissions. Let's move it up just a little bit more to factor for commissions. Now, it's not ever this much, but now that same partial on a lower time frame with the same setup is now not going to get you 1.75%. Instead, it's going to be 1.01, which is 0.5%. So that same exact trade translated to a lower time frame will, if you factor in spread and commission, give you less percent. But you'll get, let's say, 600, not even, you'll get 6,000 of these trades before you even get near a daily trade like that, right? And is 6,000 times 0.5% a lot more than 1.75%? Fuck yes, it is, right? So that's how you want to think about timeframes. Now, one more important thing that I wanted to bring up about timeframes, and I might make a video on this later, but I thought that you guys might want to hear it, and it might please don't draw on the screen, and it might actually help some of you understand why timeframes are not as important as you believe them to be. Is that timeframes don't exist for you to see actual time. Okay, the reason we use timeframes and multi-timeframe analysis is because it helps you see orders. When you look at different timeframes and you're looking at multiple different unmitigated or mitigated supply and demand zones, liquidity areas, imbalances, The reason that we use imbalances across all time frames and we use unmitigated supply and demand zones on all time frames is because those are showing us unmitigated orders. Now, what I mean by that is, for instance, right? So I want to kind of explain this for those that maybe didn't pick up on exactly what I just said. Can I delete that? Nice. So what I mean by that specifically, let's go to maybe, yeah, a daily chart's fine. So what I mean by that specifically is, let's look at, I want to see like double mitigation of an area. Here we go. So let's look at this down move. Fuck. Let's not use that actually. It's kind of shitty. Let's go somewhere else. Here, actually, let's go to a 4-hour and just work on some inside price action here. I want to see something good. Okay, sure. Maybe we can use this to explain it. But what I mean is, a lot of you understand that this right here, from this low to this high, on a higher time frame, is one supply zone. That you all understand that on a higher time frame, this is supply zone. How does it look? Right? You can go and find it. So for instance, let's go find that really quick. Right there it is. That's your up move before the down move. But what you'll notice is this supply zone right here has been mitigated on this specific time frame. Now, when we jump to a lower time frame, let's say an 8-hour in this case, we're not doing it to view a different time frame. We're doing it to view the actual orders that took place in this area. And we can now see that in this area that had the supply zone, well, it left behind two supply zones. It left behind this one right here, which was unmitigated, right? So that whole up move to down move that was fully mitigated on the higher time frame, on a lower time frame shows you an unmitigated section. And if you refine that to the actual last unmitigated move, you can notice that you actually had a lot of great opportunities to sell in here. Right? That came all the way back down to demand zones here. So there was actually fantastic sells inside of here. Okay? And on top of that, if we went to refine, there's also this one right here, right? Which never really got tapped unless you used a bigger zone. Now, the second we get to a lower time frame, we're not doing it again to view a lower time frame. When we get to a lower time frame here, what we're doing is we're trying to do it to view the orders that took place in here. Right? The time frame helps us view price, not time. That's why we do multi-time frame analysis. So when we look at this on a 4-hour, now we know that prices went to make liquidity in these areas while leaving behind imbalances in this little area right here, okay? And this little area right here. Right? Now you can draw imbalances a number of ways, but pretty much we left imbalances here and here. Now we get a little bit lower, right? And we look at that same exact price action, we zoom in, and all of a sudden, we notice that, you know, before this, we had this buy to sell. So there's could be an area of interest, and we refine that because we understand that in here, this is the unmitigated part of that entire move that was still not mitigated. So you need to partner this one with section 2. So if you haven't seen section 2 yet, and this is confusing you, that's why. Watch section 2 because I talk about the mitigation of orders. But something that I need you to take away from this specific webinar, write it down, whatever you need to do, is that we don't use timeframes for the purpose of timeframes. We use timeframes to view the actual orders that took place within the market. Because, and this is why we use an inefficiency on one time frame, even if it's been filled in another, right? Because even though on one time frame an inefficiency might have been filled, right? So on a lower time frame, this area here might be filled, but on this one it isn't. That shows us that at this specific time, on this specific time frame, orders went too quickly, which means we can anticipate fills at those areas. Similarly with supply and demand zones, even though one is mitigated on one time frame and there's technically no orders left in it on that specific one, does not mean that another time frame's supply or demand zone, if you went and refined it, doesn't have an order in it that's still left open. That's why we use them, okay? We are literally watching the orders surpass back and forth in the market. That's the importance of a story. That's why when I do a top-down analysis, I'm not just looking at, you know, I can look at price like this and just say, okay, so if I'm just looking at this price and this is all I have completely to me, you know, I'm going to look for sells at this supply zone. Why this one? Because this one technically got mitigated, so this is the next one right here, okay? And as it comes down here and breaks higher, I'm going to look for buys at this demand zone here before it got mitigated. Now after it gets mitigated, I'll look for buys at this demand zone, right? So on and so forth. And then it makes its way up here and sells off from it, right? That's fine. Now inside of here, there's going to be the same thing going on. There's going to be a back and forth of liquidity creation, things getting filled, things that look filled on one time frame but aren't filled on another. What do I mean by that? Look at this. Okay, very quickly. This might hammer the. This is the last thing I'll say about it. But this at this specific point right here is a supply zone. We can all agree on this being an unmitigated worthy supply zone. And now that means we can either sell it as is, or we can, and this is speculation, do not sue me, or, not speculation, it's perspective, okay? We can either sell it, or we can wait for confirmation on it. And if you did, again, let's go through the rule of 30 again. If you did want to look for confirmation on it, right? What's an hour? 60 minutes, right? So divide that by 30. So a 2-minute chart would be used here for confirmation. Do you guys understand that? So if you really wanted to get your potential best entry, you'd look at a 2-minute chart for the entries in here, right? And that's the best time frame for this specific thing, right? So for those that asked about what time frames do I use, this is how I use it. Rule of 30. Always remember that. Rule of 30, write that shit down. But this supply zone is valid, which means we can look for mitigations of it. Now, as price comes into it, this is now considered mitigated, right? You guys can all agree that's mitigated. But even though it's considered mitigated, why does price reach above and grab even higher prices? Because if we go and refine this actual area, we were more likely than not, now it doesn't have to be the case, but we're more likely than not going to see an area here that was left unmitigated, right? As an unmitigated supply zone, and that's why it came up there. So let's go and take a look at that just real quick. Maybe a 15-minute, right? Nothing here, not really. Again, like I haven't looked at this, so I don't know, but there you go, okay? I don't know if it actually hit this, but notice this. Mitigate a little bit of it, so maybe you didn't even get to use this one. Let's see, did it? I think it did. I think it did mitigate the open of it. But if we drew this across, I mean, that is what it mitigated. Let's go inside it, actually. We can probably even refine this more. So let's actually go ahead and refine that. Hopefully I can get lower. 2-minute. Now, notice what we have. Did this get mitigated? Actually, I think it did. Right? Yeah, it did. Okay, so all mitigated. Maybe there's not... Oh, fuck, I can't get lower. But the lower you got there, you would more likely than not, almost with like a 80 to 90% probability chance, find a supply zone in that area that was still left unmitigated. And now, what the fuck happened to my chart? And now the reasoning behind why price came a little bit higher inside of the zone will make sense to you, because you'll, one, understand that we came to liquidate the highs that we created, right? A lot of highs here means that there's a shit ton of liquidity. Made a lot of highs, came to liquidate it. But at the same time, we're not just liquidating highs, we're also mitigating more orders that we still left in these areas from previous buys to sells, okay? So hopefully that made sense. I wanted to make a distinction between a lot of you that thought that timeframes were, you know, actually important just because, you know, oh, it's a 1 hour, so it's gonna hold. No. Timeframes, and the only reason we go between all of them back and forth is because they show us the actual orders in the market. You know how a bank can see the orders, you know, with like they can actually view the retail orders in the market. They can see the actual stop loss and stuff like that. We can do the same thing with banks and view their orders that they're waiting on because they need to go and fill certain areas by looking at different timeframes. That's why it's important. Just like they can see orders, we can see theirs if we understand how to look for them, right? Just because this area here is mitigated, right? So if you notice, you know, like here, let's actually look at this one. So we have this big, let's say that we have this supply zone, comes down, mitigates it, comes lower. Just because on this time frame, you can see it's fully mitigated. Actually, this one specifically, this last down. If you use this as a supply zone, now I'm not saying this is one, this is more advanced to use like areas like this as supply zones because you understand how price has been moving. This would be considered mitigated right here. But the fact that price came higher here shouldn't be like, why the fuck did it do that? Because if you went lower and looked inside of the zone here, there's going to be another unmitigated place that banks left behind or institutions left behind to go and close specific orders to then actually continue on their move. So, you know, they say it's unfair because they can see our orders. Guess what? We can see theirs if we know how to look. So that's something that I really wanted to touch on in this webinar. And hopefully a lot of you either found that interesting or can start to use it now. And yeah, so hopefully that helped a lot there. All right, let's go through some questions. I don't think I forgot to go over anything that I didn't want to go over. That I wanted to go over, I mean. So I think that's all good. Let's go through some of the questions. And then we will go on. Has Anton see you tutors in me? I no idea what that is, bro. Oh, somebody asked about POIs. Yeah, so definitely check out section 2. Again, there's no dumb questions, but also I expect that people treat this as a real personal journey. So even though I am here to somewhat hold your hand and give you the ability and the and the concepts to go and create an entire system for yourself, I'm not going to, you know, just give you the answer to everything unless I'm available and I'm just free and I'll just be like, whatever, fuck it. it's expected of you to go and watch, rewatch if you have to, and take notes, as well as backtest, forward test, test with a small live, whatever it is, every single thing that you are taught. You're not taught this because you are taught this because this is the way that I view the market. This is the way I understand it, and a lot of you, it seems like, have learned a lot from me because I explain things in a way that I guess makes sense. But that doesn't mean that, you know, you can skip everything that's available to you and just kind of hop on the back of either signals, either other people's ability to trade, other members, anything of that nature. Because, like I said, it's a personal journey. All those people got there and got to where they got, whether they're funded or they're doing really well or they're having a great month, using the exact same stuff that is available to you. So it really just comes down to, are you going to use the knowledge available to you, or are you going to slack and look for a continuous signal service, right? Because ultimately, when you're asking things without watching everything, it's the equivalent of asking for signals, even though you're trying to learn to trade. It doesn't make any sense, right? And that's why I'm not a signal service. That's why everyone here understands that we've never done signals. But yeah, concerning POIs, go and watch section 2 because we work on that really well. If you had a question about what POI actually means, it's point of interest, and points of interest are any supply and demand zones. Okay, now they don't have to be mitigated, right? Usually we use unmitigated ones because it tells us that there's orders in there and we can use that. But as a lot of you have seen my markups, I will also use mitigated ones because of the fact that I understand, one, just because we've tapped into it does not mean we've closed all orders. And two, sometimes there's more orders to be taken out, balanced, remitigated, or orders to liquidate before we actually make a real move. So hopefully that made some sense. Again, no harsh feelings. We're all here to help each other. I think this is like the one group, the only one group that I've ever seen or known of that isn't complete like toxic as shit, especially from the people that learn versus people that are new. But definitely it's a personal journey and you guys need to dedicate yourself. Awesome. No dumb questions. Exactly. There's no dumb questions, but also you gotta make an attempt. Points of interest. Yep. You didn't know yourself either once upon a time. What the fuck? Section 2. Exactly. Section 2. Ignore Emily. It's not a stupid question. I didn't know until a few weeks ago. Exactly. Yeah. There's no real stupid questions. If you're confused, you're confused. And sometimes even something that might be explained to you can be confusing, which is why we have this community. We work with each other and we help each other. All right. Go through the content. Definitely work through the content. Again, these webinars and the stuff we talk about can sound like a whole bunch of horse shit if you haven't seen the webinars or the YouTube videos and you're not partnering that information together, right? When I say shit like, oh, the time frames are not time frames, but they're price and they're imbalances, it's not going to make any fucking sense to you unless you've made your way through the stuff that we teach and the way we think about the market, right? Anton breaks how to identify your POIs. Yes, exactly. He breaks down everything very well. Thank you guys. Videos on Ment's YouTube. Oh yeah, also, just because you're in here does not mean you're done with the public YouTube. I think a lot of people misconstrue that. Now, the private structured course, trust me, is a lot better than almost all of the YouTube videos combined, okay? Because it's a step-by-step version of viewing everything and kind of almost having a criteria entry to your stuff. You can really just write an entire system down right now using those 3 sections, but those 3 sections are not going to have the power or the effect on you that I intended them to if you are not partnering that stuff with the public YouTube. So even though I upload stuff on public and, you know, there's newbies that are going to watch the stuff on the public YouTube and get super fucking confused. They're just going to be like, what the fuck is this guy talking about? When you guys are in the mentorship and have seen all the sections and then watch any new video I release, you should basically be knowing what's about to come out of my mouth before it comes out of my mouth. When I look at, for instance, right, because we've been trading XRP this weekend, as a lot of you remember. When I look at, for instance, where is it? Let's go find it. You guys remember we were bullish on this. When I look for the buys that I had off here, and we want to understand why we had these buys or why we were looking at these areas, a lot of you should be able to, even on the YouTube video, if I'm looking at something like this, you should be like, okay, we had a downwards trend, but it's part of a larger trend, upwards most likely on a higher time frame. So we know we're most likely bullish. Why is he looking at this area? Oh, okay, there's most likely an inefficiency there on a lower time frame. So even though it's mitigated on this one, there's probably orders left there that we could see on a lower one. Okay, cool. So maybe he's expecting the move up to there to come down to then continue this bullish run. If you remember at the start of the week, I pretty much, at the start of the weekend, I sent out a chart that said this, right? Looking to make completely new highs. I mean, lo and behold, we had XRP fly to absolutely new highs. Again, it's not because I have friends at JP, I don't have friends at HSBC. It's because I looked at price and said, where the order's heading, where's the order flow, where's it more likely to go, right? And I sent that out, and that's how we looked at it. Now, if I went to a lower time frame here, and I asked you, why did I sell into this, why did I hedge, right, stuff like that, you should be able to explain it yourself, and that's why you partner the public. So, you know, again, not everything's available in the private, but all the private allows you to make real sense and actually allow the public to act as its own educational thing, right? Just like when you go off on your own and backtest or forward test, that's equivalent to sometimes going into one of my public videos and just kind of talking yourself through what I'm doing. And if you can, again, predict what I'm going to say before I say it, it's not because I'm repetitive, it's because it's actually been instilled into your brain. And when something gets instilled like that, you grow confidence about what you're going to do. And when you have confidence, you actually grow as one individual and a trader. All right. Work through some of these. Emily, by the way, in this group, we all pray to the mighty Allah before going to bed or before eating. We will review that later, though. We will review that later, though. True. That's what we say all the time. You're fucking insane. This is true, though. On Discord, there are more videos. Mentorship. Yeah, exactly. So even though you guys all know that, you know, the public YouTube has a shit ton of more content than the private, you also all, after actually working through the private, should know that the private carries a lot more quality beyond what you get with the public stuff. So even if you were to watch all the public stuff from start to finish, you can still develop an amazing system. But you're most likely not going to have an understanding like a lot of you do at this point, especially if you've been here for a month or even more. Because I've seen people here in a week or two, and it's like fucking insane for them. And on top of that, something I do want to bring up is, I know I brought it up in one of the previous webinars, which is, you know, you see success, or maybe you see success after a while, and then all of a sudden you're just confused as fuck about what's going on. It's kind of the same with what you're going to see with new people that come in and see this content. What I mean by that is, you know, a week or two in, everything might make sense. You feel amazing. You've caught some trades. You even have a 20 RR trade that ran. That doesn't mean you're ready. Okay. What I mean by that is, yes, you probably understand the concepts. You understand what's going on. That's not the hard part. The hard part is then seeing that, you know, seeing your balance do something like this and like that, right? But as long as you stick to your actual system, it's going to accumulate. Okay. Then it's going to continue. But if you don't stick to your system, then you guys know exactly what happens. Sometimes it's going to distribute, and you're going to have to work back, and you're going to maybe get mad at me. You might get mad at somebody else, whatever it might be. But when this happens right here to your balance, it's no one but your fault, right? You should understand that you should only be trading a real account, a proper account, a funded account, a prop firm account, whatever it might be, when you understand how you're going to do it. You should be able to look at any chart and understand how you're going to get in. You should have back tested that exact way of getting in and know that it works for you, and that over enough time, that's going to be profitable. Okay. And you shouldn't ever stray from that. So yeah, let's look at this. That rule of 30 sounds legit as fuck. Let's go. Yeah, hopefully you guys understand that. The rule of 30 definitely should help a lot of you. I'm going to make a video on it because I feel like hearing the rule of 30 in Forex is pretty nice clickbait, and might get people to click on it. So we'll see how that goes. How much percentage do you take out at your partials? I always have 50%. I always take off 50. I don't like, it's just the way I do it. You can play around with this and also test that, right? Because if you notice, a lot of your trades can go 1 to 4, but they also go to 1 to 20 after 1 to 4 almost always. Then instead of taking off 50 at 1 to 4, you could take off, for instance, 20% and let 80% run to your 1 to 20, right? Stuff like that. You have to play around with it. Like I said, management and risk management is literally its own ball game. There is just as much flexibility as you have with the chart like this, right? Expecting maybe buys into the sells, into the buys, into the sells lower, into the buys higher, into the moves inside of here. And as this is selling, you're expecting a buy into here that sells into here, that buys up into here. Just like you can go back and forth on many things like that, there is almost infinitely more things concerning management, and you're going to have to go and test that stuff. And of course, we can talk about management more in depth, but I do have a video on it on YouTube. I'm never going to upload a video on YouTube about management again, even though some people think it's important, because the last time I did, even to this day, I think it has like 1,000 views on it. And, you know, each video, some of the bigger ones get like 20K, and some of the normal ones get like 4 to 5. So, you know, I'm never going to do management over public, but on private, definitely one of these weekends, we will tackle management from one, my end, and two, how you can potentially work with it in a number of ways. And I'll make it a point to try and talk about that a little bit as well. Okay. If I'm analyzing a 5-minute time frame, which time frame can I look for entry? Well, use the rule of 30. So in this case, because you're on a 5 minute, you can't go to the 1 minute. But if you're looking at the 5 minute, multiply that by seconds. So 300 seconds. Divide that by 30, a 10-second chart. Go look at a 10-second chart for entries. This is why I use second time frames. This exact thing, right? That's the rule of 30. Go use a 10-second or a 15-second. That can work too, right? But that's how you use that rule of 30. Fucking pristine. Is a mentfx block still valid if the one before it didn't get mitigated? Yes, it is. Yeah, it is. But it's just less probability. Like if you have something like this that happens, right? You see, maybe you have like boom, 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 some play around in here, right? Boom. You know, this is the high that made this low. Boom. You have mentfx block. Doesn't even test it, maybe. Boom. Right? Something like this. Boom. This is a mentfx block, but also this is already a markup. So the odds of it first of all coming here are lower, right? But it can still do that. But this is a valid one, right? Any down move that causes any down move that causes this point, or any up move that causes a point like that, is a mentfx block. Okay. This is something I've spoken about a lot, right? Just because this supply zone is part of against the trend does not make it a non-valid supply zone. Just because this mentfx block is a demand zone, as it is, that isn't tapping into the previous one, that doesn't mean it's not legit, right? It doesn't mean it's not valid. It's fully valid. But you want to, for some cases, confirm your entries in there, right? Something like that. Right? Because if I told you, if I asked you right now, okay, this demand zone, is it valid? Yes, is the answer. This demand zone, is it valid? Yes, is the answer. But they're not mitigating each other, right? Nothing mitigated this one before this one got made, but that doesn't matter because there's still orders here, right? So in the future, either they want to come here to go higher, or they want to keep going lower to come higher, right? This one just becomes less probability, which is why, again, we use confirmations. Again, they don't have to tap each other to be valid, but usually you'll see them do that, especially if you watch them over a bigger period of time, right? If we go back here, right, and just kind of, again, you can study mentfx blocks yourself, but what's the move that caused this? Again, it can be subjective, it can be argued, but for the most part, it's either this one or this one, the real swing. But let's use this one just for the sake of explanation, okay? You have this move down. Now, it does mitigate here, and on a lower time frame, this is a mentfx block, but because you're working on this time frame, you need to be aware that order flow is multifold. There's multi-levels in order flow. So you want to see a proper pullback. If anything, you can use a rule to have a 50% pullback, at least for a mentfx block. So this one would count. And if you notice, what caused this low? This high. Did that high get validated ever? No, until it came here. Then, when did it validate? Here, okay? So that's your next mentfx block. And again, we'll talk about mentfx blocks in the future again, but hopefully this will help you. Okay, great. Now, we want to see a pullback to somewhere that's actually worthy of a pullback. Okay, now notice this. This never came to 50%, which is why when people ask me, should I use 50%? I say you can, but it doesn't mean that it has to, right? What I mean by that is, in this case, this would still be a valid push down. Why? The thing that would confuse you is that this right here would be your mentfx block, is what you would think, right? Because it gets validated right here. But again, when you're working with this time frame, you need to zoom out and think about it as big chunks being stuck into and mitigate it out of the market. By the time this impulse happens here and this low occurs, now you can already assume this is a mentfx block. So this one would be it. Comes lower, you can assume this is, right? Where does it get confirmed? Here. Fantastic. So it gets confirmed, okay? So that's 1, 2, 3 in a row now. Let's go up a little bit. Now, this one begins to drop. No, it doesn't even come into it, but even if this came into it right here, I would not count that as a mentfx block. Why? Because this move didn't show me that it wanted to come and fill anything for real in these areas, right? This is where a little bit of subjectivity comes in. This is where the idea of real smart money comes in. You have to ask yourself, does it make sense for it to go higher after tapping in that much? In this case, does it make sense for it to go higher after tapping in this much? Well, 1, it filled in this imbalance. 2, it then actually cleared liquidity and filled in this demand zone. So yes, at this point, even though it hasn't come to this point or 50% of the zone, does not make it invalid, right? This is where a little bit of, you got to use your brain a little bit here, right? It's not like just straightforward. So I'd be using this one. Now, okay, we come and make a new high. Now this is where your question gets interesting. This right here is a valid mentfx block. However, the odds of this one holding are lower, which is why we'll confirm it on a lower time frame if we want to trade it, because we understand that we still haven't mitigated this whole move, right? So we have this move up here and we're still waiting for this mitigation. Let's see if we get it, right? There. The second price makes this low here. I count that as mitigated, okay? Now, that doesn't mean that price, can't come all the way here, but that's mitigated. Now, which low made this? Well, technically, which high made this? This high. Okay? This would be the mentfx block in this specific case. Now, on a lower time frame, you could go and make arguments for this being the mentfx block. And if you saw a break of this, you could trade it. That's fine. There's mentfx blocks within mentfx blocks. But on this specific time frame, under the specific order flow that we're watching, this is the move that caused this. So structurally, you're looking for this to be validated, for this to be valid. Notice what happens. Okay, so we actually get a lower move. This is your whole mentfx block. Let's wait for it to get validated. Does it get validated? Validated. Now, same thing happens. If we get a pullback that's at least into these areas here, in my mind, basically, to fill some stuff, we know that we can count this high to whatever happens as a new mentfx block. Let's see if that happens.